1. Understanding compensation in startups. Definition. Compensation is the total financial and non-financial reward provided to employees for their contributions to the organization. Importance. Directly impacts employee motivation and retention, ensures equity, fairness, and market competitiveness. Supports strategic goals by linking rewards to performance components of compensation. Base salary, fixed amount paid regularly for role responsibilities. Variable pay, bonuses, commissions, or profit sharing tied to performance equity options. Stock options or shares, often used in startups to attract top talent despite limited cash flow. Key insight: strategic compensation in startups balances financial constraints with talent acquisition and retention objectives. 2. Designing salary structures market benchmarking. Compare salaries against industry standards, competitor offerings, and regional cost of living. Adjust salaries based on experience, skill level, and strategic importance of roles. Pay bands and grades. Establish levels of compensation for different job roles and responsibilities. Ensure internal equity and transparency. Performance, linked compensation. Reward high performers through bonuses, incentives, or promotions. Align rewards with individual, team, and organizational objectives. Key insight: transparent and competitive salary structures foster trust, motivation, and reduce turnover. 3. Employee benefits and perks. Mandatory benefits: Social Security, health insurance, pension contributions, and statutory leave entitlements, compliance with labor laws to avoid legal penalties. Voluntary benefits: flexible working hours, wellness programs, skill development, and training opportunities. Non-monetary perks such as remote work options, team retreats, or recognition programs, equity and ownership opportunities. Offer stock options, profit-sharing plans, or milestone-based incentives. Align employee interests with long-term growth and business success. Key insight: thoughtfully designed benefits enhance employee satisfaction, loyalty, and overall engagement, even in cash-constrained startups. 4. Payroll management. Payroll processing. Maintain accurate records of salaries, deductions, bonuses, and benefits. Ensure timely salary disbursement and statutory deductions. Compliance with tax and labor laws. Deduct and remit income taxes, Social Security contributions, and other statutory obligations. Maintain transparent and auditable payroll records. Payroll automation. Leverage HR software and payroll platforms to minimize errors, save time, and maintain compliance. Integrate with accounting systems for financial reporting and planning. Key insight: efficient payroll management prevents disputes, ensures compliance, and builds employee trust. 5. Performance-based incentives and rewards. Incentive programs. Short-term, monthly, quarterly bonuses, commissions, spot rewards. Long-term, profit sharing, milestone-based bonuses, equity vesting, non-monetary recognition, public recognition, skill development opportunities, mentorship programs, enhance employee motivation without immediate cash outflow. Linking rewards to performance. Align incentives with measurable KPIs and business outcomes. Encourage ownership, accountability, and innovation. Key insight: performance-based compensation drives desired behaviors, boosts morale, and encourages retention. 6. Balancing budget constraints with competitive compensation. Financial planning for compensation. Forecast salary and benefits expenditure relative to cash flow and revenue. Prioritize critical roles for higher compensation while offering non-monetary perks to others. Alternative compensation strategies: deferred bonuses, equity options, flexible benefits, and recognition programs. Focus on intrinsic motivation and personal development opportunities. Key insight: startups can compete for top talent by creatively structuring compensation to align with financial realities and employee expectations.